Let me show y'all how to trade for big profits. Okay, I'm gonna show you how to take trades that's going to give you a lot of profits on the trade. These trades come with a high level of probability that you will be correct in the trade, that you are correct in the trade. And these trades are a lot more successful and a lot more easier to find, in my opinion, than trading on the lower time frames. So check this out. So as you can see right here, we're on the Euro USD. This is the weekly chart, right? So here's what you want to do in order to make a lot of pips in the market. First thing you want to do is go to your weekly chart. You want to see what is the overall trend direction taking place in that currency pair right now. As you can see, this trend direction is down. Price is going down on the weekly chart. So after you understand the big trend direction, then you want to go down to your next time frame. From the weekly, you want to go down to the daily time frame. Alrighty? So, you know what? Let me close out. Let me turn this indicator off right here. Let me just turn this indicator off. This is my overbought, oversold indicator. Let me mute it so it won't go off every time we change the time frame. I just put that to false. So now it shouldn't go off when we switch time frames or update the charts. So look, so we know based on the weekly chart that our overall trend direction is down, correct? Correct. So what we want to do, we want to go ahead and look for trades to the downside, meaning we only want to take short positions. Now, if you are a counter trend trader, meaning you trade both ways based on momentum, it really doesn't matter to you which way the overall trend is going, then that's fine. But definitely, if you counter trend trade, you know, I'm not opposed to counter trend trading. I have done it before. I don't do it as much now, but sometimes I will take a counter trend trade. But if you do take a counter trend trade, you definitely want to probably halving your stake on the trade. So if you normally trade 2% of your account per trade, if you risk 2%, then if you're taking a counter trend trade, you may want to go down to 1%. And you may want to watch the trade a little bit more, because you never know how far price is going to pull in the opposite direction of the overall trend before it rejoins the trend. So if you are a counter trend trader, that's fine. Just be careful with those types of trades. But we know the safest trade in the market is with the overall trend on higher time frames. Okay. So back to what we were saying prior to that. On the weekly chart, you're going to notice the overall trend was down. So you definitely want to be taking shorts, because shorts will give you a higher probability of your trade being a winner. So here's what you want to do. Here's the best type of trade that you can take. Let's say, I'm going to condense the chart just a little bit so we can see it a little bit more. But let's say the trend, so since this trend is down, right, here's the best trade you can get. So when price goes back up, breaks the level, when it goes back up and price is reversing right off of this resistance line right here, this is the most optimum trade that you can get. It's on a daily time frame. Price is reversing off a level of resistance. These resistant levels on the daily chart, sometimes they're like over a year old, 1 year, 2 year, 3 year, 4 years old. So let's see how old this level is. And then I'll explain to you guys what that means. So this right here is a 4-year level, right? On the Euro USD, it's a 4-year level. This simply means this level has been either support or resistance over the past 4 years, meaning when price reaches this level, it either turns around, it just has some type of reaction from the level. Now sometimes price will shoot past the level just a little, because we know support and resistance is more of an area. It's not just one line, it's more of an area. So what you want to do when price reaches these levels, you just want to look for certain things. You want to see how strong are the candles, the size of the candles, where you are on the chart in terms of your indicators, how are they reading. You definitely want to make sure you're in the right direction of the overall trend, and you want to add all of the things that you use as confluence, meaning if you use any type of indicator, if you use, you definitely want to use price, if you use any moving averages, if you use support and resistance, if you use anything that could make you think or can confirm what you already think price is going to do. Okay, so right here you see that price came up to the level and price began to show weakness in that level, and it actually turned around and went short, just as we thought. Now, you don't use your indicators to confirm your trades. You use your indicators to confirm what you already think price is going to do. All right, let's look at another example, but let's look at another currency pair. So let me pull up my pairs here, and I'm just going to take the GBP CAD. Just going to randomly take a couple pairs, show you guys the importance of support and resistance and the importance of a top-down analysis. Alrighty, so I'm back on the weekly chart now, right? And when you're looking at the weekly chart, guys, you got to remember from this line, this is called session separators. So from this line to this line on a weekly chart represents 1 year of price data, right? So this is 2019, this is areas 2018, this is 2017 right here, right? So let's try and tell a story. So we came down in 2017 to this level of support. Price bounced off this level, it broke this level, and it went back up to the stronger level of resistance. Remember, I told you support and resistance is an area. It's not just one line. So it broke a little higher, stayed within the area, and came back down. As a matter of fact, it retested the resistance again and still came down to this level of support. This is a 1 year level, right? So what you want to do with your trades is you want to make sure that when let's say you're in a position, let's say you were in a sell position here, right? From here, you were selling the market. You want to just be aware that as price is approaching this level right here of support, you want to just keep an eye on it. You want to watch your chart to see if price is going to have any type of reaction from this level. Okay? Now, so let's continue. So price hit this level of support, went back up, came down again, got to this level. Now, if we know how price is reacting to these levels, what do you think is going to happen right here? Of course, we predict price to go up at least to this level, and that's about 736 pips. If it breaks through this level, then we would think price is going to go up to this level. Okay? But we wait for clues in the market to tell us what price wants to do. Alrighty? Now, of course, price could go through this level and break all the way down, right? And come to this level. It could shoot past the level just a little bit, just to turn around. Those things do happen. But what we don't do, we don't try and predict the market. We move with the market. Here's what I mean by that. Let's say, for instance, price is going up from here, right? No, let me give you a better example. This is perfect right here. Hold on. So let's say price went up here. Wrong tool. Get that out of there. This is what I need. So let's say price went up here, right? Now you predict price to turn around. But as you can see, price didn't turn around. Price actually shot past the level just a little bit. Here's what I mean by we don't predict the market. We move with the market. Although price shot past the level just a little bit, We would have never been in a sell trade when price was here. Because we don't guess. We don't say just because price is here, it's going to turn around. We would have got in a sell position when price started to show us that it was going to turn around. So we would have got into a sell position here to go back down. Because on this candle shows us, as I line it up, take a look at the candle, right? Take a look at your momentum down here. This candle showed us that the momentum was beginning to turn in our favor. Get my candle right here, guys. This candle here, everything lines up, shows us that momentum was beginning to turn in our favor. So this is when, on this candle here, this candle right here, we would have begun to look at the position to take a short. Only on this candle, because it showed us price wanted to turn around. Give you another example. Let's take this price action right here. Price went all the way up into this level, right? Right? You never know what price is planning to do. It could reverse at this level just like we think it is and go back down, but we don't know that. We still have to wait. We still have to wait. We have to wait until we get this candle right here. Because this is the candle that showed us weakening in price and momentum wanted to go to the downside. That's the candle. Although we thought this is what we would see. We don't jump the gun just because price comes to the level of resistance and then just place a sell order. It's not what we do. We wait until we see the evidence that price wants to go down. Then we go short. Then we follow our 3 chart method. Here was the close of price right here. We would go to the 4-hour chart. Here I go again. I'm kind of giving away some of the strategy a little bit, but oh well. I make money trading. I don't have to sell the strategy. Let me show you guys something. Let me find where I'm at on this chart. Sorry, had to pan out. Okay, so I'm right here. I'm right in this area. Let me blow it up again. Show you guys where I'm at. Okay, here's how we trade that. So we get the signal here on the 4-hour chart. My stop loss will go right here to swing high. High of the previous week, right? I only mark my stop loss there. Then I get down to that 1-hour chart. Gotta pan out, guys. I gotta find it again. It would be better if I actually knew the date, right? I didn't look at the date, but oh well. I'll go back and find it. There it is. There it is. There it is. I'm gonna put some soft music to this video because I want everyone to hear exactly what the analysis I'm going through. So remember, here's your stop loss that I set. Tighten it up on the 1-hour chart. Here's our trading day right here. Right? No, this is the day we got the signal. Here's our trading day. Trading day starts right here. So what I would do is I would wait for a pullback. Put me into momentum right here. Just one of the strategies. I would go short right here. Right? Because I already know my direction. Now I'm just waiting on momentum on the 1-hour chart to tell me to go also. Boom. Whoa, that's a huge stop loss. But hey, 2% is 2%. Let me show you why this is so effective. Look at here. Remember, on the 1-hour chart, from this line to that line is 1 day. From that line to that line is 1 day. So if we're going for 300 pips on the trade, right? 300 pips stop. 307. Whoa, got the 300 pips in roughly 2.5 days. 300 pips clean, and I'm out of here. See it, right? Come on, man. You see it, right? Let's do that again. Let's go back to the weekly. Let's clean this chart up. Get rid of all the lines that aren't support and resistance levels. All right. Pick another currency pair. Pick the Euro USD. I just grabbed it, guys. I ain't cherry picking this thing. I'm on the weekly chart, right? Analyze. 2018, remember? From here to here represents 1 week of price data. This is 2018. Price went up, it went down. Pulled back a little bit, and it's on its way down, right? So when we get here, we expect price to turn around unless it breaks through. But we don't tell price what to do. We just follow price. So if it gets here and it gives you a blue momentum candle up, you know we're going up for the ride, and we'll look to get to these highs. 709 pips. But let me give you a trade example right here. So say price went down right here, right? We believe price is going to reverse up, but we don't tell the market what to do. We don't know when it's going to reverse up. We just know in this area, price has a potential to go the other way. So I would watch the area, right? You know what? As a matter of fact, I would only use the weekly to show me the trend. So trend is down. Let me hop over to the daily, because we can actually get trades on the daily. The weekly chart would take way too long. You wouldn't even be a trader anymore. So look, back to the trades. So let's use another example. Let's use this right here as a clean example. On the daily chart, price is going up. What do I predict price to do up here? I predict it to turn around, but I'm not sure it's going to turn around. It may go through the level. But when price does give me a signal that it wants to turn around, gives me that candle, that momentum candle down, boom, I match it up. There it is. I match it up with my momentum. So I want to take this down. I want to go down. Okay. You want to go down? Let's go down. Again, I go to my 4 hour. Find it again. Find it again. My 4 hour right there. What do I do on the 4 hour, guys? Set my stop loss. Yeah. Go to the 1 hour. Let me find this thing. I saw it. There it is. This is the day that gave me the signal right here, which would mean this is my trading day. Right here. Stop loss is already set. Trading starts. I come out here. Look right here, guys. Look right here on my momentum. It gave me the indication to go short. Get in line with the trend. Into the trade. Stop loss is what? 82 pips. Oh my gosh. How quick can I hit this? Oh, I hit this on the same day. 82 pips. If I'm trading one standard lot at 82 pips, that's roughly $820 for that day. Yeah, I'm done. Forex King.